Good morning, this is Mayor Valensky with Driving Markets. Okay, so let's look at what is driving markets today. Firstly, apologise for no YouTube yesterday. I was just in meetings and travelling and I couldn't quite get to the phone and do a long enough broadcast. But let's look at what's happening today and what's driving markets. So, the markets have returned to their bullish stance across the board. So you've got the Dow running at 35,854 yesterday. You've got the Nasdaq at 14,490. You've got the S&P running at about 4,400. You've got Bitcoin, which went up yesterday over, I think, $800. It went up to 44,500. So it's back on its bull run. Oil has come down. Bonds. Wow, the US Treasury is running at 1.93. So in other words, bond investors are demanding a higher yield. So the price is going down and the yield is going up, which is unusual in rising markets. When you got a bull market, what happens is that the bond yield would normally fall because investors turn into riskier assets like shares, and therefore they don't invest in bonds. However, what you've got is you've got bond investors which are inflation sensitive and interest rate sensitive, looking for a higher return because their forecast is that interest rates will be well above 2% in the States by the end of the year. So why should they invest in a bond at 1.93% when they're looking to get 2% by the end of the year? So the bond yield will rise and bond prices will continue falling. Eventually that will have an impact overall sentiment on stock markets, shares, and high-tech investors. But at the moment it looks like that's being discarded and disregarded, and the investors are piling back into the high-tech, the Nasdaq, and into solid shares. A couple of solid shares that are defensive shares is Pepsi-Cola and Coca-Cola. Pepsi-Cola is going to report results soon, and there's been a big uplift in the number of attendees going to restaurants, and therefore call option traders are buying calls on Pepsi simply because they reckon that the uplift in the number of people going to restaurants will also affect the sales on Pepsi-Cola and Cola, which makes sense and it's logical. So option traders are going long on calls and look like they're going to be quite results are going to be above expectations when it comes to Pepsi-Cola. What else have we got to look at? The price of oil has come down a little bit. However, I do see it going back, in my opinion, to $100 a barrel very, very quickly, simply because there's global demand there and there is a lack of supply and a lack of supply chain where ships and tankers just aren't moving around as quickly as they should be. Looking forward to interest rates and where they're likely to go. Interest rates are likely to go high, as mentioned earlier. Inflation is still bubbling along very, very nicely. Unfortunately, it's really underlying inflation is extremely hot, and that's going to feed through to headline inflation. And I would expect the Bank of England to raise interest rates again at their meeting in March, probably by 0.5%. So you'll end up with a 1% interest rates in the UK. And in March, I expect the US to increase interest rates by at least 50 basis points, just to be aware of that. As far as the ECB is concerned, I'm not so sure which direction they're going, but there is a view that they will raise interest rates in March. But they are very, very nervous because being the ECB, they've got multi-countries to consider, and a lot of those countries are in dire straits. And by increasing interest rates, it's going to make it even worse and have the impact of that downtrend and corona bigger and more intensive and extensive on their particular decisions. Okay, that's it for now. So you can contact me on LinkedIn, on WhatsApp, on YouTube, and comment on the YouTube. This is Mayor Valensky with Driving Markets. If you need any assistance, please call me. Have a good day.